second session of our 9th annual capital markets and M&A update. Good. Today we have Tonka Bay and Orange Tree with us. They're going to share their story about how they got together. On February 2nd, 2021, private equity firm Tonka Bay Equity Partners invested in Orange Tree Employment Screening. Tonka Bay's investment in Orange Tree has accelerated the company's ability to grow and deliver even more for its customers. Joining us is Tonka Bay and Orange Tree representatives share perspectives related to the deal and their newly formed partnership. Tonka Bay Equity Partners is a private equity firm that acquires and invests in growth-oriented businesses in the highly engineered manufacturing, business services, and value-added distribution sectors. Tonka Bay Equity Partners was formed in 1998 and is based in Minnetonka, Minnesota. Orange Tree Employment Screening offers fast and easy background screening services so companies can hire quickly. Orange Tree designs background screening programs and delivers them with innovative technology, peace of mind compliance, and responsive client care. Orange Tree Employment Screening LLC was founded in 1990 and is based in Edina, Minnesota. So similar to our first session, we do want to make this collaborative Q&A throughout. I think the way we're going to arrange this is kind of 3 or 4 buckets. So the first section will be introductions, get to know a little bit about Tonka Bay, the company. Secondly, we're going to talk a little bit about how the deal came together. So what was the process of introduction and what was the timeline? What were some of the things that happened pre-deal? We'll mix in a little bit about COVID, I'm sure, with that. But then we're going to talk about some things at kind of deal closing, and then finally, how is the company looking today? What's going on post-closing? So with that, I'm going to hand it off to Shane to give us a little bit of an overview about Tonka Bay and her role in the process.
Thanks, Joe, and thanks for having us today. We really appreciate it. So I'll just provide a little bit more background on who I am and on Tonka Bay. So I'm Shane Slominski. I'm a partner at Tonka Bay Equity Partners. As Joe mentioned, we're a private equity firm that was started in 1998. So we've been investing for over 23 years now. We're based right here in the Twin Cities. Our office is in Minnetonka. We just raised our 4th fund in 2020 that we're investing out of, and it's a $200 million fund. And our strategy is to invest in founder-owned or entrepreneur-owned businesses. So that's our niche. These are situations where we're typically the first institutional capital, is what we like to say. And these are businesses that have been established, they've been around for a while, typically 15, 20 years or more. They're profitable businesses and businesses that have a strong growth profile. So we don't specialize in one industry. We invest in business services, manufacturing, distribution, but the commonality is more around the situation: profitable, established, growth-oriented businesses. And our tagline is building bigger, better businesses. And where we think we can really be a good solution for the business owner is to provide a creative solution, not a one-size-fits-all solution, but a solution that can provide them with liquidity today and a partner for growth to create that bigger, better business. The way we do that is by putting together a structure that gives them some cash today to take some chips off the table, but then more importantly, a partnership, and we like to use the term partnership, where there's a lot of alignment with the management team and the owner to grow the business. And the way we do that is by providing resources that they may not have invested in historically, because of their risk profile or risk tolerance that changes over the course of time. And we can bring some resources to bear that can accelerate the growth profile of the business. And we work very closely with the management team to develop a strategy to do that. Over our history, we've invested in 40 partner companies. We have 8 in our portfolio today, and about 1/3 of those businesses have been based in Minnesota. So we really like investing here locally. Not only is it close to home, but we think we speak the same language, and there's a cultural fit with businesses here in our backyard. And so we'll get to Orange Tree, but there were many reasons why Orange Tree was a good fit, but just so happens it's based here in town, which was a really nice part of the transaction.
All right. Brian, you're listed here as a board member of Orange Tree, but your relationship with Tonka Bay actually goes back far beyond that. Can you talk to us about how you got introduced to Tonka Bay and what that relationship looked like? And then also how it's evolved now to a board member of a company.
Okay, thank you. And thanks for the invite again today. I met the Tonka Bay guys back in 2006. I'm the founder of a company called Apex. I started that company in 1995. Apex is a statement processing company that focuses on healthcare. So all of you at one point in time received a Apex statement in the mail from Fairview or Alina, or one of those people. I designed and sold those statements to those medical providers. We then took the company and made it into more of an electronic company, electronic payments. And as I was thinking about the process of the company, trying to develop it, I started, I was 27 years old. So all I knew was how to be a salesman, and my degree from St. John's University. That's kind of what I had to start this business. So I met the Tonka Bay guys. I knew the company had gotten to a certain level where I needed to really bring in a partner that could help me, think bigger, broader, look at ways of financing acquisitions. And I talked to a couple different private equity firms, and then in 2007 did the deal with Tonka Bay. And to kind of fast forward all this, the private equity talk, ultimately I was involved with 3 private equity firms. So Tonka Bay is the one that really gave me my start in having a private equity partner. They invested in 2007, exited in 2013. The next partner was from Boston. They were involved from 13 to 18. And ultimately sold the company to a 3rd equity firm out of Chicago that owned our biggest competitor. So I spent a few years with them, or a few months with them, and then another year consulting with them before I went back around with the Tonka Bay guys. For my size wise, Tonka Bay was a perfect fit for me. They helped us, triple the size of the company in those almost 7 years, almost triple EBITDA. And the next firm that came in really used the Tonka Bay playbook, and we just duplicated that. We built technology, did an acquisition, cleaned up synergies of that acquisition, and then exited. So it took me 12 years to get my company from my basement to $16 million in revenue. When Tonka Bay got involved and when I ultimately exited, we had $122 million in revenue and about $20 million in EBITDA. So you can imagine during that whole time frame, when I owned 100% of the company or when I had partners, obviously learned a lot. Learned a lot from the Tonka Bay guys. It was a great mentoring relationship. They brought in a professional mentor, one of our board members to help me out. And I just learned a lot from being around different private equity guys. So when I made the final exit, I contacted those guys again. And we started just talking about different opportunities and things I'd be doing. And they asked me if I want to be an operating partner. And it sounded pretty cool, right? Be an opportunity to get to work with guys you like. And one of the deals we looked at was Orange Tree. So we looked at that deal, and what I do for Orange Tree today is really what some of the mentors I've had over the years did for me. Being a CEO is the loneliest job in any business. You have no peers. When things go well, you compliment your team, you spread that around the whole team. When things go poorly, it's your fault. And that's how you handle your board, right? That's how you manage your board. And so I work with Renee on some of the ideas that she has and how we can take those ideas and generate them into really events, something we can execute on. Also work with her a lot on really the language of private equity, which is different. It's odd. If you've ever been around it. It took me about a year to figure it out. They speak their own language. And so I operate as a interpreter between Tonka Bay and management. So when the Tonka Bay and the private equity guys say, hey, we want to do X, what does that really mean? What's the timeline for that? Is it okay to ask for money? It's okay to spend money here. And that's some of the things that we've done to help out the management team. And the story is great. We're fortunate to have a great CEO and a great team. And you guys will hear more about the Orange Tree story in a bit here.
All right, thank you, Brian. Before we jump into how you guys got acquainted, Renee, can you share a little bit about your background as well as the company?
Sure. Can everyone hear me? Okay. So good morning. Thanks so much for having us. Thanks, Joe. I'm the CEO of Orange Tree Employment Screening. We've been around since 1990, as Joe shared. I became the CEO in 2018. And at that time, we had 3 owners owned Orange Tree at that time. And the only active owner left the business, and then 2 of the other 3 stayed on the board. We're a global provider of background screening services. As you can imagine, speed is everything right now for our clients. We're the only thing between a candidate becoming an employee. So our focus is really on becoming a technology company first. We've been in that transformation probably for the last few years, and I think in this partnership here, we'll complete that transformation.
All right, thank you, Renee. Let's get into the deal. So I know there's a million ways to make a deal happen. I should say there's a million ways to kill a deal. There's only one clear path that ends up happening to make a deal. How did you guys get introduced initially, and what did the initial courting process look like?
Well, maybe I can kick things off and Renee can talk about the more recent kind of interactions, but it's kind of interesting. Every deal's got its own story. There's no two stories that are the same. We're introduced to business owners a lot of different ways. Sometimes it's through our network, sometimes it's through an intermediary that's representing the seller. Sometimes it's just happenstance that we get connected to the business owner. And interestingly enough, we were first connected to Orange Tree in 2016. So about 5 years or earlier than when we ultimately put together our partnership. And we got connected through a mutual acquaintance and really hit it off. There was a lot we liked about the business, which we'll get to in a little bit. And I think we just kind of, the personalities of Tonka Bay and Orange Tree meshed, but it wasn't the right time to do a transaction for either side. And so we stayed in touch. We had a common connection through one of our investors at Tonka Bay who had a connection with Orange Tree, and we stayed in touch over the course of time, and ultimately met a few times during that time period, and just had it was kind of serendipitous because we had all these common touch points. I think actually at one point along the way, my wife and I were remodeling our house, and the contractor we were using gave us some references, and Renee and her brother were the references. And so it was just a crazy reason to reach out to Renee and stay connected during the course of that time. And we ultimately hoped we'd have the opportunity to put together a partnership. And so we stayed in touch, and maybe that fast forwards to 2019, and you can take it from there.
Sure. So in early 2019, we were having a really great year. Growing, doing well, and our current ownership had been owners of the business for maybe 17 years. And I think there was just a little bit of fatigue. And so I think they thought this might be the right time. And they were our serial entrepreneurs, so this wasn't going to be their first deal. And so the choice we made was to talk with an investment banker we talked with a few years previous. And the chair of our board at that time led that process with me. I hadn't been through a transaction. No one accuses me of being a CFO. So fortunately, I have people around me who are, and so that was a significant help. So we went through the process of starting to interview other investment bankers. We didn't identify a particular buyer at that time. We were just thinking about, can we make sure the business is ready? Do we have all of our ducks in a row? We were pretty buttoned up business because earlier when Craig and Shane had met, and I met Shane at that time, selling was already on the owner's mind. And so I bet for about 3 years or so, we started really paying attention to financials, making sure they were reviewed by national firms, things like that, that really help when you get to the time to sell. So we went through that process. By end of year, we were ready to go. We had our corporate book, which never knew what that was. There's a lot of things I didn't know just a few years back. It's really, I'll just say a quick thing about that. It's a ton of fun to get to do that process, because there's hardly ever a time as a leader of a business when you celebrate where you are and just take some time to do that. So it's a worthwhile exercise, even if you're not thinking about selling, because you declare where have you been and where are you really headed. So it was a wonderful experience. We had a really good investment banker. I think what he told me every day for 1.5 years, I'll tell you why it took so long. That's a long time. Renee, we're just going to take one step at a time, because I'm always like 18 steps ahead. He's like, yeah, we better go here first, because who knows where we'll be when we get to step 18. So we fast forward to 2020, we went out to, we started to market the business. We probably had 7 to 10 original or indications of interest. We met with 5 to 7. I can't remember the exact number. Tonka Bay was one of those. And it was a combination of private equity. I think there were 4, actually there was only 2 strategics and everyone else was private equity. And so we just started meeting with them, and then it's hard to imagine this was 2 years ago, but you get to middle of March. And we're finishing our management meetings, and we have this whole COVID thing, the pandemic hits. So we're thinking we're gonna probably button up and close this down by June. That's not quite how things went. Am I getting ahead of myself in the story? Okay. So we took probably a 50% dip that Q2. So you're probably not gonna stay on the market to sell at that time. And the buyer said, we're not interested right now either, let's hold. But Q2, we rallied back pretty strong. And so our owner said, let's just go back at it. And I was in favor of that because we'd done so much work at that point. So we found ourselves back in a deal process. And Tonka Bay had the best offer for the owners. Things changed a little bit during that time. What was important to the owners, what they were thinking about our future. I think for us, it probably worked out probably better than it might have had we sold the first time, to be real honest. It's a very interesting dynamic when your CEO is not an owner of the business, but has some kind of change in control bonus. And strategics they can come in with a ton of money. But we might have an interest of continuing the business. So it was just a really interesting time. So what we got to do is have an amazing, the offer was great for our owners. The owners won, we won. Like I can't imagine a better scenario where everybody won in that deal. So it really worked out well. So I don't know how many stories people have about the pandemic being that worked out for the best, but it sure did for us. And I know we're going to talk later about the year our last year we had, but it also positioned us to have our best year in business. So there's a lot of exciting things about the partnership.
So the timing, you said you were going through a process in March of 2020 management meetings.
Yep.
Obviously there was a lot going on at that point. Can you share any more detail, or are there any fun stories about that time?
Well, let me maybe kick things off, and then Brian can chime in. So obviously, as Renee said, they did hire somebody to represent them, and we were thrilled to get the call that the timing was right for the Orange Tree owners to talk about a transaction. So we really dug in and were sincerely interested in trying to win the day with the ownership group. This is in sort of December 19, January 2020. And we were able to get a management meeting. And so we were excited. We called Brian, who is now an operating partner, as he mentioned, and invited him to join us to the management meeting. And our management meeting was on March 9th of 2020. And if you remember back to that point in time, I mean, the pandemic was just starting, and people didn't really know what to think. Should we still have meetings? And we still did. So we went to the meeting and had a really nice meeting with Renee and her team, and had dinner afterwards as well. And shortly after, Brian can take it from there.
Yeah, it was a great meeting, and I wanted to go because there's so many things that we liked about this business, looking at the book and everything. So that weekend before the meeting was high school hockey tournament. So that was Thursday, Friday, Saturday, and I watched Hill Murray and St. Thomas play, and all teams I like to see. But Sunday morning, I woke up and didn't feel that great, but just ran to urgent care. Left the gym, ran to urgent care, and they're like, "You're fine. Test me for influenza A and B. You're fine here. Just rest." I'm like, "Okay." I'm like, so I'm to bed early at night. I get fired up to take this big meeting with the Orange Tree group and the Tonka Bay people. So got up, still didn't feel that great. I'm like, okay, whatever. Pound some Diet Coke and go. So went to this meeting, and it was just like normal, right? Pre-pandemic normal meetings. You walk in, you shake hands, you sit close to each other. After that, we went to dinner and had dinner for 2 hours. Then we're really close to each other and talking and drinking and having a good time. And then the next morning, I actually had a meeting with another Tonka Bay partner on a different subject. So I met with him. And then that day, I said, I'm not feeling good. I went back to the doctor for the second time. Test me for influenza A and B. No, you don't have them. You're fine. But Wednesday night is, so quickly in the week, Wednesday night's like when the pandemic hits America, right? And I'm like, I should probably get tested for this thing. I'm going to go on spring break with my family. So I'm trying to get tested. I call my doctor, and she says, "Hey, just tell him you were exposed to somebody who had COVID, and you'll be in the line for the test." Because there's like, 100 tests available in the state. So I do that. Next thing I'm in a parking lot in Fairview in Bloomington with the guy at the hazmat approaching my car, hazmat suit. I got tested for COVID on that Friday. Then that following Monday, they called me and told me I had COVID. So you want to kill a deal? Why don't you infect the management team with COVID? Just gonna kill a deal that way. And that was back in the time when you had the state of Minnesota, the Department of Health would call my house and said, tell me everybody you've seen the last week. I'm like, well, these two, everybody who works for them or works with them. It was a pretty long list. So I had to call Shane and say, hey, I might have killed that deal at Orange Tree. I have COVID. We have to call them and tell everybody that this exists. So there, in Minnesota today, we have 1.3 million people who've been officially diagnosed with COVID. I was patient number 274. Frank Vassalero is a friend of mine. He called me and said, hey, you want to be in the news? I'm like, no. I eventually, he's pretty persuasive. So I was. So there's an interview with me about that same time as one of the first people to stay with COVID. Only nice about that is when I was totally healthy, the whole country was shut down. I was just kind of cruising around like everything was normal. But yeah, it's definitely a way. One of the many ways you can kill deals is, almost kill the management team.
So we had called the investment banker and tell them that we had exposed everybody at the meeting to COVID. So but the deal got put on hold, like every deal, as you can imagine, if you're in the deal business in March of 2020, every deal that was in process got put on ice for a period of time while everybody was trying to figure out what was going on.
It's fascinating because we could talk about it now without the shame of it, but like going through it at the time, right? Anybody that got COVID, it was just like, oh gosh, I gotta go tell everybody. Fun fact, I think I and my family have not tested positive throughout the entire time. And now it's kind of like, if you haven't tested or your immediate family hasn't tested positive, it's almost like you're the outlier. So anyways, we've talked a little bit about, some of the relationship and some of the process. What were some of the key value drivers? And think about, how did you view Orange Tree fitting into your portfolio in terms of the investment thesis? Can you talk about some of that?
Yeah, why don't I kick things off, and Brian, you can certainly chime in too. As I mentioned, we had really hit it off the first time we met Orange Tree. We not only liked the business model a lot, which I'll talk about, but we really liked the team, which is so important, as Ron talked about in the first panel. So you kind of go through the list of what we're looking for in the deal. Orange Tree really checked all the boxes. They had a strong team with strong leadership at the top with Renee. The business model was very interesting. It's a tech-enabled services business. And again, during the first panel, they talked a little bit about just kind of tech-enabled models. And the cool thing about Orange Tree is they have their own proprietary technology that they're able to use to provide best-in-class services to their customers, which is super important in this day and age when being quick to hire is so important given the labor shortages. It was a scalable business model. So leveraging the technology platform that they have provided a huge opportunity to leverage and scale. I feel like I'm going through Ron's list from this morning. Large addressable market. The background screening market, if you think about it, everybody in this room that is part of a management team of a company, you're doing background checks on every hire you make. And you're using an outsourced service provider to do that. And every company in the country is doing that. So it's a massive addressable market, 3 billion and growing. So we're not a small company in a small market, we're a small company in a large addressable market. And it's very fragmented. There's a few big players, but then there's a steep drop off. And so it's very fragmented. So that's a positive for two reasons. One of which, it's easy to take share. Like there's not a lot of firms like Orange Tree that provide this best-in-class service at our size. And so we're able to take market share from others, but also that opens up an M&A opportunity. There's an opportunity to pursue add-on acquisitions given the fragmentation in the market. And then the growth profile. I talked earlier about how important growth is to Tonka Bay. Orange Tree was poised, and we'll talk about that more later, but the company was at a little bit of an inflection point where they were well positioned. They built the technology, they had the team, they had the strategy, and they were ready to really execute an aggressive growth strategy, which really got us excited.
Yeah, and things that I liked about it, I was involved during the due diligence and really focus on like the revenue side, the sales and marketing side, stuff that's really my bailiwick. And companies like this reminded me of my old company. Recurring revenue, like the sweetest thing you want. In my old business, every single day we're mailing statements, right? We're getting data from customers, we're mailing statements. Here's the same thing, just it's constantly cranking. People are constantly hiring and they need the background screening. So that was great. And then low customer attrition, single digit low customer attrition, which is great. It shows that they have a great customer service team, that they're building relationships with clients. People just don't view this as some sort of utility they use and then walk away. And of course, the team itself, you got to find people that you're going to get along with because you're going to spend some time together. Our Tonka Bay and Apex, our relationship is almost 7 years. It's a long time. So you better get along. You better have the same kind of values and be set ultimately where you're trying to drive that business. And all those things kind of check all the boxes for me as we look at the business.
So you guys put things on pause for a bit, and maybe I missed it. When did you get back to the table, and what did that timeline process look like? And then ultimately, can you speak about any, probably not specifics, but some negotiation issues or roadblocks that came up?
So we put things on pause in March. We started to feel really good about making a comeback probably sometime in July. And I believe it was September, we made the decision as a board ownership and management team to go back to the folks that were interested in us previously and asked if they were interested. So I think by the time that happened, October sounds about right. And then we did have a few people come back. And we decided if we could negotiate an offer that made sense, we would definitely do that, and we did. I think what was different, the offers were structured differently because now there's a lot more risk in the marketplace. So it's super nice that we were making a comeback, but at that time especially, there was just no way predicting what was 2021 going to look like. And were we going to keep making a comeback, harder to forecast. So there was just so much uncertainty. The structure of the deal shifted a little bit. So I would say that was the biggest change. And then the negotiation of that structure. So I think that's primarily what happened once we chose a buyer, is just really coming to terms on just the structure of the deal was a little bit different. And I don't know what private equity talks a lot about EBITDA. So there was a question or two about that, just financials, but honestly, overall, the process went pretty well. I think our owners were ready. We had a deal on the table that was very fair, and management was going to get to live for another day. So I'm not sure that could have a better outcome. And I know both Brian and Shane have talked a lot about the relationship, and we did have a really strong sense on the management team we could build a really good partnership and people would still have a chance, and that was a big deal. But what I would say too, that was our owners, though, that wasn't the only thing that was important to them. So that's why I say it was so interesting to have a win for everyone involved, because sometimes the highest price is all that matters. But in this case, we got all of those. And so we were really excited by the time, in fact, you said February 2nd. For me, the 29th is the day, because that's the day that the deal closed. And so it wasn't a long time after we got back at it. In fact, I think we targeted Christmas, and with the naivete of this being my first deal, I couldn't understand why we couldn't close in 2 weeks. I know a lot better now why that might not happen. No matter how many resources you think you have. So really, I think the negotiated offer was sometime around Thanksgiving, and then we closed just a few months later.
I think we did our press release on February 2nd, but the deal actually closed January 29th. So we're 3 days away from our 1-year anniversary. Maybe just to add on to that, I think, we were, the good news is we had willing kind of parties at the table when we re-engaged late that year. I think the tricky part in terms of the negotiation was what had happened to the overall market that Orange Tree serves. So Orange Tree's business is tied to hiring. It's not employment or unemployment necessarily, but it's how many hires are being made. And if you think back to 2020, it seems like a lifetime ago, but there was not any hiring going on. There were layoffs and furloughs and things like that, but there was not a lot of hiring. So trying to structure a deal was probably the trickiest part that made sense for both parties. I would tell you from Tonka Bay's perspective, we had a lot of conviction in the business, and we really wanted to put something together despite all of that, because we had a lot of faith in what the team could do and what the business was going to do going forward when you took some of the noise out of the numbers. It was obviously tricky. Again, this seems like ancient history now, but every deal back then, you were trying to figure out like, what's the sustainable level? What's the normalized level of revenue and earnings? And people had made staffing changes. And so you had to try to figure out, well, we're gonna have to bring some of those people back when the revenue comes back. So not only did you have to think about, what was gonna happen to revenue, but what were you gonna have to do from a staffing perspective. And so it was tricky to figure out what the right level of ongoing EBITDA is, not to throw out that term, but what was the right level of EBITDA to think about for the business going forward. And I think, again, good news, we had willing parties at the table, and we were able to put together a creative structure. Most of our deals, the owner has some ownership going forward because they believe the future is bright, and that was certainly the case with Orange Tree. And we were able to structure a deal that wasn't the same deal they thought that was going to happen in March, but it was a combination of cash, rollover equity, which I think is a very exciting thing given where we are today with Orange Tree, and some contingent payments post-close.
So I'm gonna ask your questions in just a minute, but I'm gonna ask one more. I think we've all been in a number of deals, right? And I made the comment, there's a million ways to kill a deal, but it takes a lot of things to go right to get through it. Were there any 11th hour issues that popped up? And again, maybe the answer is no, depending on how much you want to share, but is there anything that popped up that you guys had to kind of push through? I've seen a lot of deals as an advisor on the insurance side where you got to come to terms and just close it, right? You just got to get past it and push through. So to your comment, Renee, why can't it get done in 2 weeks? Well, it's a process. So I don't know if there's anything there that you want to share.
Go ahead.
It's a tougher question, so okay if you defer it.
There was, so I would say, but that's a combination of things. The owners weren't involved in the day-to-day negotiation. And so I think all that happened is when you have owners that have been there for 17 years, that's a long time. And even when you think you're ready, there's a question mark there. And so I think that kind of popped up, and just wanting a more understanding about the earnout, because that wasn't what we really thought we would do originally, but it's what we agreed to. So I think it was just a combination of, hey, we're really going to do it. We're 48 hours away. It was close. So it wasn't the 11th hour, but it was close. But fortunately, just I don't know if it's cooler heads prevailed, or you just really looked at the offer on the table was really good. And so I think there was a moment there with ownership, investment banker Shane and I, that I don't know, it's hard to think about that now. Like sometimes I wonder how serious was that, but I just think it's when you get to the end, there's the combination of excitement and is this really our best offer? So I think that's just a common thought, but we worked it out. And it didn't take a long time to work out. We did not sleep for days or anything like that. But so yeah, a thing came up at the end.
That's a much better answer than what I was going to say. I had some, dumb deal dynamic, or just blocking and tackling stuff, getting customer and vendor consents and things like that always come down to the wire. But the interesting thing, and I give Renee a lot of credit here, because, as you mentioned, the owners weren't active, and it wasn't just one owner. We've had many transactions where there's one entrepreneur, owner, founder who is not active today, and there's a CEO, and so there's sort of this triangle in the negotiations. Here, Renee was leading the negotiations, but behind the scenes there were 3 owners, and all of them were at different stages of what they wanted to accomplish with the transaction. And so she had to manage 3 different personalities and get them all to the closing table, and that did provide for some very unique circumstances that week leading up to closing, but got it done.
I think I blocked out the consent thing, but that was a thing too.
I don't think it's uncommon when you get so many different constituents, from investment committees that have to sign off, board members trying to walk that line of being involved enough in the detail, but not micromanaging the process. And then the CEO and the CFO and the executive team trying to figure out when they make a decision to move forward with the deal versus bubbling it up. Like it's this constant, so it's not hard to see. And then again, from a professional service provider standpoint, there's always going to be something that blows up where the diligence wasn't quite buttoned up, or a reps and warranties carrier picks on something. So I appreciate you guys' responses there. I got about 20 more questions here I could ask. Does anybody from the field have? George?
Shane, you mentioned at the outset that Tonka Bay's invested in 40 different companies. You've got 8 in your portfolio today. So that means that 32 have come and gone, if you will. Some of those have been home runs, some have been singles, some are perhaps not so much. Without putting you on the spot, without naming names, unless you want to, can you talk a little bit about, a home run and one maybe not so much, and the things that the organization learned as a result of those different kinds of deals that you've done over the years?
Can you repeat the question too for the?
Sure. The question was just, as I mentioned, we've invested in 40 partner companies and we have 8 today. So that means we've had 32 that we've exited, and not everyone's a home run, but could I mention a situation where a kind of a good outcome or a home run, and then maybe one that didn't go well. We've had deals that haven't turned out as we planned, for sure. Usually that's where we have had some sort of an issue where there was like a customer concentration. We talked a little bit about the characteristics of Orange Tree. I don't know if we mentioned just their diversification of their customer base and industries. One of the really neat parts of their business model is they're not concentrated in any one end market. So as the economy goes, COVID aside, normally as the economy ebbs and flows, Orange Tree's in so many different industries that their business is a little bit insulated from that. But where we've had bad outcomes with deals, it's where we've talked ourselves into it, accepting a customer concentration, and then it goes wrong. And that customer leaves for some reason that had nothing to do with the company. They move overseas or something like that. I'm hesitating. I don't want to just placate Brian, but to be perfectly honest, like Brian's deal is the classic home run. He is the poster child for Tonka Bay for not only just a good partner. We have so much in common with Brian that we enjoy partnering with him, but his transaction was a poster child for how a transaction should play out. Relatively young founder when we partnered together, did all the things that he talked about, and now he's had the opportunity to sell his company, how many times? 3 times? 3 times so far. And so, it's just a poster child for how a transaction with a founder can play out. And I think it all comes down to leadership. The reason why it was such a successful outcome is because of Brian's leadership and the neat business model that he put together.
Yeah, thank you. And I'll touch on that a little bit. In our first year out of the gate, when Tonka Bay invested, Shane just talked about customer concentration, but we had a vendor concentration issue, which came up during due diligence. I explained it, the best way I could, and that it wasn't going to be a big issue. It became an issue 6 months into the deal. So we had a vendor that we had to replace, and that vendor, basically our data from our customers, 98% of it flowed through that vendor. So when they start screwing around with you and putting roadblocks up, it affects every single one of our clients, which affects our entire revenue stream. So we had to scramble and rebuild that connection on our own, which meant building up the technology from the ground up. Did that successfully, which is why the Tonka Bay hold was a little bit longer. You always think about 5 years is kind of a nice round number for private equity guys to get in and out. They like to do it in 3. Sometimes they're stuck, like with us, with 7. But it made the company way stronger on the exit, which allowed us to get a great return when we exited, made the company more desirable for the next private equity firm. And those guys also had a nice return. So it worked out well. I learned a lot from being around these guys, and that's why I like doing this with them and trying to convince other business owners that all the negative stuff you've read in the paper about private equity firms doesn't exist here, especially in the state. And it is really the way to find entrepreneurs, to let them grow their business through a way they never thought of. I never thought I'd run a company with $100 million in revenue, right? My dad worked in his office, one man, sold insurance his whole career, and it was a very small business. My mom sells real estate, right? That was kind of I thought someday maybe I'd get an assistant. I sold the business, I had 185 employees. So, and the way you do that is, again, it's with having professionals behind you who support your ideas, and kind of check you when you come up with crazy stuff. Entrepreneurs like myself come up with crazy ideas. And some of those are awesome. You got to chase them, but you probably need some reasonable people around you to say, hey, this is really not a great place to spend a lot of time and money. Let's focus over here. And that's what we did. and ultimately made the company successful.
That actually dovetails into my next question pretty well. So moving on to kind of some post-closing, you said we're coming up 3 days from the anniversary. Renee, can you speak to maybe a little bit about Brian and the rest of the board and how they support you and what some lessons learned have been over the last year?
Well, I absolutely can do that. So it was a shift for me in terms of just private equity, Shane's team, Brian's team, wanting to understand the business. And so those early months, lots of conversation. I would say what was the most noteworthy about those conversations, though, was every conversation was about growth. And so even though the best advice you get while you're trying to sell the business is keep growing the business, keep running the business, it's very difficult to do that. You need to do that, and you're trying to do that, but you're not talking about that as much as you once were. So that's what was super noteworthy, is how quickly that started. In fact, it started, the Monday after. And it was, Renee, so what are we going to do this year? What's happening? Fortunately, we had an amazing January, which the only reason that's sort of a funny thing to say is typically we have a seasonal aspect to the business, and January dips just a tiny bit. And it didn't. We just came right out of the gate strong, and it just never stopped. It just was the nature of last year in hiring. We love hiring at Orange Tree. So there's just people moving all over the place, and companies are hiring. They were kind of just vamping back up after the year before, where lots of companies had to kind of, they just kind of pull back a little bit because of all the uncertainty. So I think that was one of the things right away. Brian, he shared earlier, that really was his job, was to support me through the transition and just say, hey, here's how things are the same now, and here's how they're different. I don't think I was super warm to that relationship to start. I think I interpreted it as, Brian's going to come in and fire me and run the business. So I think it took a little bit for me to just kind of make the transition with this team, if I were to be candid, and nothing could have been further from the truth. That's newspaper reading about private equity. And so I had my own kind of biases towards private equity I had to shed, despite I had no reason to believe that. So I think Brian played a huge part in helping me to see, hey, you know what, we're just here to make you better and make the team better. I think another thing I learned probably about a year before I started working with the business coach that supported me through the selling process, because I didn't know much about it. And one of the things he prepared me for is your management team might go through a transition. Sometimes people get worn out by the sale. And so we did have a change, both in our technology leader and our financial leader. And Brian also made referrals to those positions. So here's the thing that was amazing. We had growth conversations every day. How do we get better? How do we make the technology better? Here's some people that could potentially join your business. Both did. And so the business was stronger and better in a very short amount of time. So that was, for me, the primary shift. And it was really important to have a push like that, because you are a little tired after the process, and they're excited. You're tired and they're excited. So it was a really awesome opportunity to have someone so willing to partner with me and spend time with me once I kind of got over that he wasn't trying to kick me out of there. So it was, and that kind of just happened that way the rest of the year. They helped build the board. So we have a board of people who are just, that's all they're thinking about is growing the business. So I think that was the fundamental shift, is it just kind of gave us permission. We had lots of ideas. This wasn't a management team that wasn't thinking about a lot of things. And then we didn't have any debt. So that was also a change. We had money. So that was a lot of fun too. So I think we got the upside of just a really great team of people who knew how to help us manage the business, accelerate past the process, and then invest in the business. And that's what we've been doing all year. So we were able to position some ideas for growth for this year, and we're actively working on those. So that's kind of what the difference is. We have a CFO and CTO that we didn't have before that can know how to help us scale. We have operating partners on the board and with Brian that can give us daily advice if we need it. And we just had a really great year. And so the rest of the company now is on fire, because there's nothing more fun than winning. So we had a year of a group of people behind me that were supporting us to win, and now the business is winning and we're investing again. And that success begets success, as you know, so.
That's great. When we were kind of doing some of the planning for this, I think the way you defined it was, okay, now that the deal's closed, what are some of the objectives? It's building the team, you touched on that. Building the board, you've touched on that a little bit, and then defining the strategy. And so I know we talked, defining the strategies, kind of one bucket in and all of itself, and then another bucket of M&A. So can you touch on maybe both of those, organic and M&A, what the last year looked like?
Yeah, so I can do that too. So fortunately, we already had a little bit of a rhythm with organic growth, but we, in addition, really scaled up our digital marketing, which has had a significant impact. So we had our best sales year ever last year. We also bought a business out of Georgia that we closed on in November. So we had our first acquisition already, and that transition is almost complete. It's going really well. They were a super cultural fit. We're a very client-centric company. And so this company was too. So that transition is active and almost finished. And we are looking at other deals. We had kind of a heartbreaker too. So we already had a deal we worked on together and lost. And so we'll just keep looking. There isn't any reason not to. So we have aggressive goals around that. And the business owners, background screening business owners, are tons of fun because the industry was born out of security. So you have no idea what these folks used to do. Half of them were in surveillance and vans doing God knows what. So it's just been a ton of fun meeting them and finding out about them and seeing how they can become part of the Orange Tree family. So I think organically, the sales team was already hitting a stride. And I think making a marketing investment only provides more leads to them. So that's really working well. And then we were able to have kind of a smaller tuck-in, which obviously that all helps with revenue. And so this year, really, we're still working on a lot of the same things. But in addition, we're working on, we call it the marketplace, a way for people to engage the background screening process without having to talk to anyone. It's that product-led mindset of people don't want to talk to sellers. They want to go online, they want to customize and buy and do everything they want to do right now. So how can we create an elegant solution around that? So we're working on that. We've already done a ton of back-end automation, so we're really primed for that. So it was, and then client retention last year, interestingly enough, I actually predicted we might have a harder selling year. We sell into HR. So when you sell into HR last year, if you can imagine trying to hire, you can't find enough people. It's a competition. You're still trying to manage all the COVID restrictions or get your business back to normal. So I thought, would we sell? I knew we'd retain. We have a strong model, but I thought there's just no way people are thinking about changing background screeners unless you're terrible, which we're not. So it worked out great. But so to have a year or two where we almost hit our sales goal, but our best sales record ever, I'm really inspired for this year. Because I do think on both sides of the coin that that'll start to impact. HR teams are going to have a little more freedom to pursue objectives again. So I think maybe look out a little bit on the retention side, we'll see. But I think we're only poised to be even stronger organically, and hopefully we can tuck in a few more. Some other background screeners in the industry as part of the Orange Tree family.
I'm going to open it up for questions. Before I do so, Shane, Renee, Brian, any comments that you want to make sure you hit on before we get into a little bit more Q&A with the group? In the back?
Yeah, well, congratulations, first of all, on the success. It sounds like a great story. My question is around the acquisition targets and the tuck-ins that you just recently commented on, and wondering how you evaluate the cost of acquiring those customers yourself organically versus looking out and acquiring a tuck-in, and kind of what are the metrics, I guess, and kind of how do you evaluate that type of decision?
Did you plant that question?
And could you repeat?
Do you want to repeat it or?
So the question was, as we think about M&A and pursuing add-on acquisitions and the cost of capital that goes with that, how do we balance that with the other option, which is just targeting acquiring new customers organically, which is less expensive? We've had a lot of conversations about that with Renee and the rest of her team. And I think, yeah, it is a balancing act, especially because of how much wind the company has at its back today. And if we were having trouble getting organic growth, we might be more aggressive about pursuing add-ons, but Renee's being pretty modest. If I can just, brag for her for a second. We were hoping coming out of 2020, our first year of ownership was 2021. We were hoping to get back to 2019 levels. 2019 was a record year for the company. That's when they were going to market to sell the business, and it was a record year. And so everything had sort of come together in 2019. So as we thought about the bounce back post-COVID, our hope was we'd get back to 2019. So during the course of the year, this past year, we were always measuring against not only prior year, but also measuring against 2019. And because of all the ideas the management team had that Renee had mentioned earlier that they were now putting into effect, the company just blew 2019 out of the water. In fact, when I think you surpassed 2019 revenue and went early November. And so, ended up exceeding 2019 by a large margin. So we have a lot of confidence that we can grow organically with the investments we're making in technology, the digital marketing initiatives we're pursuing. So it's kind of a long-winded answer to your question. We're going to look at every opportunity on its own based on the merits of the deal. Our goal is to do both. I think the team that Renee's built now has the horsepower to continue to pursue organic growth, especially through our digital marketing efforts and with our continued investments in technology. So we're going to continue to do that. And we're going to be opportunistic on the add-ons. The good news is we don't need to force it. We closed this one in November. We lost one that was a little bit of a heartbreaker. The market's hot right now. So we recognize we're not going to win every deal. And we're going to keep looking. We don't need the acquisition activity to generate the type of return that we all want. But if we can get it, it's going to be great. So we're going to be opportunistic and evaluate on a case-by-case basis.
One of the things that I think came up was you guys are experts in that area, right? And Orange Tree hasn't done that in the past. So you guys jump in with a hands-on approach when it comes to evaluating those investments, so you can conduct, not necessarily divide and conquer, but really supplement the management team in that regard, right?
Yeah, I don't know if we're experts, but we at least can kind of bring that capability to the team. And so our philosophy at Tonka Bay is these are small businesses, small teams. And so when we do work on add-on acquisitions, we can lend some horsepower to get the deals across the finish line, both due diligence, legal documentation, financing, and all that, so that the management team can continue focusing on the business. With the one exception probably being Renee. And I think one of the things that Renee and Brian have talked a lot about, because Brian did a number of acquisitions when he was running Apex, is it really is a CEO to CEO relationship, that sale. So I think Renee is spending a lot of time developing relationships with business owners that could be prospective add-on candidates. But once we get the deal, we can provide some leverage for her team.
Right. And I guess maybe the observation there was I've seen so many deals where management now is focused. They're struggling to run the day-to-day because they still have their day job. And now they're getting hit with diligence requests and deal terms of negotiation and much more high touch with board. And so you guys add a lot of value in that regard. I guess my point. We got one up here.
Actually build on that question. So Renee, congrats to Tonka Bay for a great leader, right? You've obviously got someone who's highly focused. You talked about learning a lot through the process. How did you keep your management team focused? You're selling the dream. You're trying to keep laser focused on day-to-day. How'd you balance the two?
It's a good question. I think transparency, there's always a decision to be made about who should know about the process. And in our case, in my case, I decided the executive leadership team did need to know. And so a lot of transparency about what we were doing, why we were doing it, and what it would look like. Our investment banker, we had a good relationship with him. So I invited him in early to talk with us about every step of the opportunity, so we would understand what would be required of us at different times. And then I did as much of the work that I could do on my own. Fortunately, I did have a lot of talent around me and people that could manage a lot of the day-to-day. Not all of it, but a lot of it. And so where I couldn't do it, then those folks we did need to bring in. We also looked at some change of control for the folks that we're going to have the heaviest due diligence hit, because that's just true. Finance and technology has had a lot more to do. So we made sure those folks were taken care of. And fortunately, just at that time, we just had a lot of people underneath us that could have done well. Had we not had a pretty strong middle management team, I'm not as sure how that would have gone, but the transparency was a big deal. Everyone was on the same page, and then just the educational awareness. None of us on the team had been through any kind of process like that. And then just I had a business coach that was his job during that time. Was he worked just with brand new CEOs, so I'd started working with him the year before. I didn't have an expectation of starting a selling process so early in my tenure. So he also provided some just good information to me. So I think we just became as educated as we could. And then frankly, sometimes it's really good when you have no idea what's coming. So we didn't know to be afraid of the last 2 weeks, or we didn't know management meetings would be so time consuming. There's a lot of things we got told and educated about, but we didn't really know. So sometimes that helps. I'm not saying that's a strategy, it just happened to be how it worked for us. So those were the things that worked for us.
We have just a couple minutes left. Time for one last question. Up front.
I hope you guys got some vacation time built into all that process. The reps and warranties, did you guys have trouble with that with COVID, or did it work out fine? What was the stress point there? What can you say?
Are you talking about just the legal document in general, or?
Getting the insurance?
We did not use reps and warranties insurance for this transaction. So we just had a traditional structure with an escrow. So fortunately, we didn't have to deal with that.
All right. Shane, Renee, Brian, thank you so much for your time and the discussion today. We're going to break for another 15 minutes. We will be back at 11 for our deal makers panel. So thanks again, everybody. There are new refreshments in the back. I think I see some cookies back there. So we'll see you guys in about 15. Thanks.